What's up, everybody? Welcome to the Stocks channel. My name is Cory, and tonight's episode is going to be your stock market technical analysis update. Before we get into the charts, go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. First off, we're going to take a look at the ticker symbol SPY, which is our SP500 ETF. So let's go ahead and crack open these charts and see what's going on in the stock market today. Alright, so the first thing we want to take a look at is our bear bull survey, because we do have the update for the week. Now, just a reminder, the historical averages for bulls is 38%, so we're still not quite up at the historical average, and we're sitting right around 35%. Historical average for the bears is around 30%, and we still have more bears than bulls because we still see 35.7% bearishness. That's great news for the stock market going higher, because remember, if there's bears in the market is more likely to go higher because these retail investors are typically wrong, and they will eventually make an emotional decision to FOMO into the market, which is going to be right at the top. So it's still a likelihood that we could see that melt up to these higher price targets before all of these bears eventually turn into bulls. And it'll be at that moment that the big money will trap the retail investors and start dumping their positions. Now, obviously that's speculation, but it's the Friday weekend and it's the weekend edition of the stock market technical analysis. And we are going to go ahead and start out with some speculation. So buckle in and enjoy the ride, and here we go. So first up, I want to take the S&P 500, and we are looking at the SPY ETF, and I want to switch it over to a monthly chart. Now, if you're new to the channel, the first thing you need to understand is we do have what we call the magenta resistance trend line, and that resistance trend line takes the bottom of 2009 price action and the top of 2018 price action. And as you can see, this resistance trend line has been very critical in calling market tops, dating back all the way to 2009. So in 2009, this resistance trend line was support. And ever since 2011, we've broken underneath that trend line, and it's been acting as resistance. So we can see here it's been resistance all throughout. But the key levels of resistance did occur at 2018. When we got up to that resistance trend line, we did get a 2-month pullback, and it was a steep correction. Now, if we go forward in time, you can see we did not hit that trend line again until February of 2020. And you can see again a 2-month steep correction once we got to that level. Of course, what's already happened, we can see here on the chart, is we got that V-shaped recovery, and we went all the way back up to the resistance trend line yet again in August of 2020. And in September, we did wick above the resistance trend line, but it was short-lived. And you can see the rest of September was a huge sell-off, going all the way down to the lows below August lows. So this resistance trend line has been so critical, and it's been such an important trend line to keep an eye on. And the other thing I want you to pay attention to is this green trend line, which has been support for this rally ever since the crash. You can see this is a very tight upward rising wedge, and typically speaking, rising wedges usually have a fallout to the downside, because if it continued at this rate, the stock market would just keep going up in a straight line. And we all know that is not likely going to happen. The stock market will have consolidation periods, and it should eventually break out of this tight upward rising wedge. So why is this speculation, and why is this even worth talking about? Well, it's speculation because we don't know what's going to happen in the stock market. If you're a follower of the channel, you know we're very objective, and we do technical analysis to follow the trends. And this is heavily speculative, and it's very up for interpretation on what could happen in the future. And there's no guarantee anything I'm saying could happen exactly the way I'm saying it. So take it with a grain of salt, but it is something we do sometimes on the weekend videos, and I thought it would be interesting to go into this. So now that you know how important that trend line is, let's go ahead and zoom out here and look at where we are in these super cycles. So if you've already seen my other speculation video, you'll know that we're going up in 5 waves on this monthly chart in a grand super cycle. And if you haven't seen that video and you're interested, it should be up in the top of this video somewhere if you want to go ahead and click on that. But essentially what you need to know is we've been going up in these 5 waves on the monthly chart. And ever since we had the correction in March where we had that crash, that could have been the 4th wave of this super cycle. Even though it was very short-lived, it was an over 30% pullback. So that could have been our wave 4, and we could be in our wave 5 right now. And we could be going up into this $360 level on the SPY ETF, which could be the end of wave 5. You can see that also coincides with right around that resistance trend line. And whether we break up above and actually get to 362, or if we get rejected right around 355 is to be determined. But either way, that's a close enough difference where we don't need to know exactly how high wave 5 is going to know. We just need to know when we get to wave 5, we would expect a steep correction. So if we zoom out here, you can see that a steep correction would be a retracement of this entire 5-wave pattern. And I already have it out here on the chart. You can see a 0.236 retracement would bring us down to SPY levels of 286, and a 0.382 retracement would bring us down to SPY levels of around $240. So let's just make an assumption and say we get to the 360s and we pull back. A 0.236 retracement will be a 20% pullback, and a 0.382 retracement would be a 33% pullback. So those are steep pullbacks, and obviously it's not going to all happen in 1 or 2 months like we saw in March. It's probably going to be a gradual bear market that'll eventually bring us to those price levels. And remember, obviously this is all speculation, and I'm not even telling you we will go to those levels. It's just something to pay attention to because we are trading at very high price levels and near a very critical resistance level, as you can see from that trend line. So if you don't believe in trend lines and you think this is all just one huge coincidence, that is completely up to you, and everybody's entitled to their own opinion. However, I am paying very close attention to this trend line, and you can see there's not a lot of room left in this rising wedge before we ultimately have to make a decision on this market if we're going to break above that trend line and continue to skyrocket to higher prices, or if we're finally going to break out of this rising wedge and start seeing some type of more significant correction or consolidation period in the stock market. So just keep that in mind when we're going through the analysis today. And remember, all of this was just speculation, so don't put too much emphasis on what I'm saying. But our price targets above, and as you know if you've been following along, are 355 and around 360 to 362. So our upward price targets are exactly coinciding with this theory that we could be reaching a very critical market top in the stock market, and it could be very soon. So that's going to be the speculation portion of this video. Let's go ahead and jump back into the daily chart. So we can see with today's price action close, we did go down just a hair today, basically flat on the day from yesterday's close. However, you can see we did open higher, and we did have price action that brought us higher in the day before we did close down lower to finish the day. So we did see some sellers come in and knock the price down near the end of the day. But also remember that today was Friday and it's the middle of the month. So there was a lot of option contracts expiring. And typically when options contracts are expiring, the stock market doesn't really do a drastic move to the upside or the downside. So the majority of that premium can be collected by the market movers. So when we look at this chart, there's really no technical break of the bullish trend. We still have good price action closing right around that 5 EMA. And we still have that bullish trend very strong with all of the moving averages stacked to the bull side. And you can still see how bullish this trend is because that 5 EMA is still trading well above the 13 EMA. So we still have a lot of upside momentum, and our price targets remain $355. And if we break above that, we're going to start looking at 360 and 362 as the next price targets. So as you can see, the 355 level is going to coincide right with that resistance trend line, and it's going to be very interesting to see how the stock market reacts if and when we get to that level. Now we're in a bullish trend, but just to acknowledge there could be some pullbacks. Remember, if we start going below 341 and closing prices down below 341, that could be a sign that this correction is going to come sooner than I expect. So pay attention to that 341 level and pay attention if we start closing below that level. But right now, there's nothing showing us that this bullish trend is in jeopardy, and it's only looking like we had that short-term pullback or that short-term correction because we got so far overextended. And it looks like that upward trend is going to start beginning again. So I'm still bullish on the SP 500, but we do have upside price targets coming very soon that could bring a lot of risk into this market. And we also have the election coming up right around the corner. So if you are buying in off these support levels, make sure you're setting those stop losses because that's how you're going to manage your risk if we do start getting a pullback in the stock market. So next up, let's go ahead and take a look at the Nasdaq 100, and we're looking at the QQQ ETF, and we see the Nasdaq 100 did close below the 5 EMA today, which is not bad news, but it's not great news for the bulls because we are starting to get price action that's closing below the 5 EMA. Remember, we had price action above the 5 EMA the entire run up, and this is the first close we see below the 5 EMA in quite a while. However, we still have a bullish trend because the 5 EMA is still trading above the 13 EMA, and we still have a little bit of that gap open left, which is going to close if we get price action down into the $286 level. So it's still possible we come down, close this gap, and find support right off of that 13 EMA and then continue to bounce. All of the moving averages are still stacked to the bull side, and we can see the 20 simple moving average is really starting to break away from the 50. So even the medium term trend is bullish, which is great news, and it still tells us we want to try to buy off those support levels. Now on the Nasdaq 100, our upside price targets are 296, which we've already hit. So if we can break back above 296, our next price target is the previous all-time high right around $302 on the QQQ ETF. So the Nasdaq is still looking bullish. And we really just had a week of correcting and a week of cooling off after the Nasdaq got way overextended and opened that giant gap and was closing above the upper Bollinger Band. So it still looks completely normal and it still looks completely healthy that we had this correction. And there's nothing that I can see that is super bearish about the week we just saw other than the fact that it was a correction to the upside bull market. So next up, let's check in on the Dow Jones Industrial, and we're looking at the DIA ETF. And we see the Dow Jones had very bullish price action, closing back above the 5 EMA yet again. However, you can see we're closer to our upside price target of 288 on the intraday price action, and we did close lower, but we still have that very bullish trend. As you can see, the 5 EMA is still sloping upward, and we're still trading above all the moving averages. So the Dow Jones is looking very bullish, and it looks like the Dow Jones is going to come up and test our resistance trend line at 291. And if we could break above that, our next level of resistance is our next price target at $292. By the way, it's worth noting that the Dow Jones was the only index to actually close in the green today, closing up 0.33%, while the Nasdaq 100 and the SP 500 closed lower today. So the Dow Jones is looking very bullish, and that's a great sign that industrials are gaining that strength back that we've been witnessing when we do our sector analysis. We've seen those strength in those industrials. So next up, let's go ahead and check in on the VIX, which is our fear indicator, and we see the VIX went up 1.63% today, which is normal because we saw the stock market go lower. So the VIX goes higher when the stock market goes lower is completely normal. However, the VIX being above 27 and we're starting to see a bullish trend developing is not great news for the stock market, because as the VIX goes higher, we expect to see more volatility. If the VIX gets back up into the 30s, we could see -4 or 5% swing days yet again, and that's why I keep telling you to set those stop losses when you're buying off these support levels. So you can see here the 5 EMA is starting to turn up and close above the moving averages, and we're right at that inflection point where if the VIX continues to go higher, we're going to start seeing a bullish trend develop. You can see we did close above all the moving averages, which is bullish price action. So we have bullish price action, we're just waiting for confirmation of a bullish trend. So we're only a day or two away of knowing what the VIX is going to do, if it's going to go into a bullish trend or if it's going to continue trending downward in a bearish trend. So we're going to watch the VIX very closely, and remember, a high VIX number means we could see more sell-offs and we could see more volatility. All right, let's go ahead and check out the sectors. And first up, we'll take a look at financials, and we see financials closing up with bullish price action, closing above the 5 EMA. We still have the bullish trend with the 5 EMA above all the moving averages, and we really want the last confirmation is that 20 simple moving average to close above the 50 EMA. We also want to see financials come out here and close above this red resistance level at 25.52, which will be a new higher high on the daily chart. So higher highs and higher lows will tell us financials are going back into a bull market. And right now the financials are looking good because we have a bullish trend and we have bullish price action. So let's see if that trend can strengthen, and let's see if financials can help carry the SP 500 to those upside price targets and new all-time highs. Next up is the industrial sector. And as you could see from the Dow, the industrials were doing very strong. And you could see it here, the industrials gapped up and closed higher today, closing up 0.73%. So the industrials are absolutely looking very strong, and you could see we have daily higher highs and we have a very strong bullish trend. All of the moving averages are stacked to the bullish trend side, and they're all sloping to the upward direction. So this trend is only strengthening, and I'm looking for industrials to continue to run, and we're going to see industrials start gaining momentum and start gaining strength, because they were by far hit the hardest from the crash in March, and now they're going into that recovery mode. So this is great news for the industrial bulls, and it looks like industrials are going to continue this trend. Next up is the healthcare sector, and we see healthcare sector also had a bullish day with bullish price action closing above all the moving averages, and we see the 5 EMA strengthening again and remaining above all the moving averages. So bullish price action and bullish trending on healthcare, and we're looking for healthcare to come out here and form another daily higher high so we can continue this bullish trend. Next up, we're going to take a look at the US dollar, and we're looking at DXY, and the US dollar closed below the 50 EMA and the 20 simple moving average, so not the best price action, but you can see that this bullish trend is still picking up strength. Look how close the 20 simple moving average is getting to crossing above the 50 EMA. And we can see with today's price action that the 5 EMA did poke its head back above the 13 EMA. So we're starting to form a bullish trend on the dollar, and we do have an inverse relationship with the dollar and the stock market. So it's still too soon to say that the bullish trend is happening, but it does look like the early beginnings of a bull trend starting on the US dollar. So if the dollar continues to go higher and goes into a bull market, we could see the stock market go into a bear market and start correcting. So remember, we're near that resistance trend line, and we could be starting to see strength in the dollar. So all of these events could be happening around the same time, and that's why we're going to watch the dollar very closely, and we want to see if that dollar is going to go into a bull market. So it's still too soon to say, but we're going to continue to watch the dollar and see if this bullish trend can gain momentum. Next up is gold, and we still see gold in a consolidation. And if you remember, we want to see gold break out above support and resistance levels, bounce back off those levels, and when we get the bounce, we want to be buyers of gold off of support. But right now, let's let gold shake out of this consolidation so we can know which direction it's going to break out into. It's equally as possible that gold can break to the downside, so we don't want to make any assumptions. We just want to wait and watch the price action and let the technical trends tell us if we need to be a buyer of gold or if we need to continue to stay on the sidelines. Next up is Apple, which is our market moving stock, and we see Apple cooling off today, going down minus 1.4% and closing below the 5 EMA. We're still closing above the 13 EMA, but we still do have a gap open that will close around a price target of 117. So Apple's still looking like it has that bullish trend, and I don't see anything that tells us this trend shouldn't continue to our upside price targets of $127 and $130. But watch that gap closure because that could be a very important support level. If we break right through that gap, we could find support at the 20 simple moving average, the 50 EMA, and our support trend line, and then resume upward. So there's still a lot of support levels on Apple, and there could be more downside, and this bullish trend could still stay intact, and we could see Apple go higher. So remember, Apple is a market moving stock, so we're very interested to see what Apple's going to do, because it could give us an early warning or an early indication of a stock market correction. But right now we're still bullish on Apple, and we're still looking for our price targets up there at 127 to be hit. Next up is Tesla, and we see Tesla did also close below its 5 EMA today, but still maintaining its bullish trend. So as long as Tesla can remain above support in our support trend line, we could see another test of the previous all-time high, and our price target on Tesla remains at $503. Don't forget, Tesla earnings is coming up, and Tesla will report earnings on 10/21, which will be next week. So we could see a lot of volatility going into earnings, and obviously we will see a lot of volatility after earnings. Whether earnings is good or bad should dictate whether we're going to break through to these new all-time highs, or if we could have bad earnings, we could start heading lower. But right now it looks like the bulls are fully in control of Tesla, and I'm looking for Tesla to continue to go higher. Next up is Bitcoin, and we see the Bitcoin bulls still fully in control, finding support right at that 13 EMA. So it looks like the bulls are taking a second to cool off and buy off these support levels, and we still have that nice bullish trend, as we can see that 20 simple moving average is starting to break away from the 50 EMA. So the medium term bull trend is picking up momentum, and we still have a strong short term bull trend because that 5 EMA is still trading well above the 13 EMA. So we're looking for Bitcoin to come up and break through 12,000. And if we could break through resistance at 12,000, our next price target above is 14,000. So going back to the S&P 500, you can see everything is still bullish. We still have bullish price action and bullish trending. So there's no reason to believe we should not be bullish on the stock market right now. But as we know, everything is possible for change. So what you want to see for a bullish trend change would be the 5 EMA crossing below the 13 EMA, or if we get a price action close on SPY below 341. If neither of those things happen, you need to pay attention to our price targets at $355 and $360 and $362. Don't forget, the beginning of the video was completely speculation and my opinion only. Obviously, we're going to continue to be objective and follow the price action and the technicals, because that's what we're all about right here on the Stocks channel. So don't forget to help me out by smashing that like button. I really hope these videos are helping you out. And if you haven't already, go ahead and subscribe to my channel so you can follow along with all of our daily updates. Have a great weekend, everybody. Thanks for watching. And as always, I will see you in the next episode.